Today we have a look at one of the gentle giants in investing, which is Coca-Cola. Now the giant part is pretty obvious when you have stats like owning over 500 brands and more than 30 million retail outlets, but some of you might say, gentle, really? Well, okay, they do have a ferocious appetite when it comes to taking over competitors, but their marketing is so good. I mean, who doesn't love Coca-Cola, right? Now, full disclosure, I did recently add Coca-Cola shares to my portfolio, so let me know in the comment section if you own any Coca-Cola stock or any other blue chip companies. Now let's dive into the financials to see why you should also add Coca-Cola to your portfolio to get large and consistent gains. Stock chart overview. So a quick look at the chart of Coca-Cola shows that like most blue chip stocks, it took a massive dive during the downturn, but is now quickly recovering, and this is where we can take some advantage of the upswing in the economic recovery. The reason why Coca-Cola is an excellent company to invest in is because it's a solid revenue powerhouse that got devaluated without doing anything wrong. The company did not fundamentally change its business model, nor did they make some huge mistake causing the company financial harm. All that happened was a temporary suspension of business activities in certain parts of the distribution network. So as soon as restaurants, movie theaters, bars, etc. open up worldwide, the company will be right back on track, and these are the type of companies you want to invest in because they can guarantee huge revenue streams with solid margins, and this means that there's plenty of room for the stock to quickly rise back into the low 60s and beyond. In addition to this, we also know that Coca-Cola kept paying a solid dividend throughout 2020 and has even increased the dividend for 2021, which indicates the strong health of the company and shows the possibility for even more dividend increases as soon as everything gets back to normal. Now, in order to determine just how far the stock can rise and how quickly, we must take a look at the quarterly performance so we can get a good overview of what to expect in the next 1 to 2 years. Coca-Cola's quarterly performance. When we look at the results from Q2, the first thing that stands out is that Coca-Cola did not even lose that much revenue. Where some companies lost half their business, Coca-Cola went from about $10 billion in the year before to about $7.2 billion during the height of the downturn. This is only a 28% decline, and what's even better about this result is that the company still managed to make a profit of about $2.2 billion, achieving a 30.7% margin versus the 30.5% margin in the year before, allowing the company to even increase its margin during an economic downturn. And this is wonderful news for when the revenue starts to increase again. Before we continue, please like and subscribe to the channel for more finance and banking information. In Q3, we see Coca-Cola recovering even faster by generating a revenue of about $8.7 billion, which is just about $1 billion shy of the $9.5 billion in the year before. So in Q3, Coca-Cola was underperforming by only 9%, and this revenue was translated into a profit of about $2.2 billion, which was suppressed a bit by the much higher interest payment in the third quarter. When we take a look at the fourth quarter, we see the revenue lagging by just 5% since Coca-Cola is now doing over $8.6 billion in revenue, and on top of this, the company is actually generating an operating income of about $2.3 billion, which is higher than the year before. So based on these numbers, we see Coca-Cola already outperforming some of its year-on-year stats with much more economic recovery still to come. And this allows for a great return on your investment when investing in a company like Coca-Cola, since you'll have stock growth on top of dividend payments, and these dividend payments are also growing in size. So by reinvesting these dividends, you get even more compounding effects. This makes investing in low-valued blue chip companies with high dividend payments a no-brainer, since you have little risk of your investment devaluating, and even when you have a difficult economic year, you still earn a healthy dividend. So when a blue chip company like Coca-Cola gets devalued because of a temporary external force, it's almost like getting a 30% discount on a brand new iPhone. The product itself has not changed, it's still a premium product, but simply because other people don't want to buy it right now does not mean you should not take advantage of the opportunity. In addition to having great financials, a revenue giant like Coca-Cola is also protected by their simple but effective business model. If your company makes a certain technology, other technologies can make it obsolete. But when it comes to something as simple as a beloved beverage, you can't just innovate it out of the market. I think the past 100 years of Coca-Cola success have clearly shown this. And even when a brand or product does come close to taking market share away from Coca-Cola, they just buy the company and add it to their massive collection. This Borg-like strategy of the company gives me as an investor a great peace of mind, knowing that the company won't just fade away in the history books like some of the other giants such as Kodak, Pan Am, or Compaq. The Coca-Cola share price outlook. So we now know that based on the financial performance of the company, the stock price of Coca-Cola will see a significant boost in the coming months as the economies will open up more later this year. But in addition to this, the company will also pay a very nice dividend to the shareholders, which will further boost your gains. If we look back at the past 20 years, we see Coca-Cola has always paid a dividend and kept increasing this dividend each year to match the rising stock price. So this provides a great basis for the future and the ability of the company to continue increasing this dividend. It's most likely that the stock will quickly get back to around $62 to $65, after which it will steadily increase to around $70. This will allow for a nice 30 to 35% gain within the next year. Now, an important side note to the Coca-Cola stock is the fact that it's very sensitive to the more generic changes in the global economy. This makes it an ideal stock to buy coming out of a downturn, but also somewhat slow to recover and heavily impacted by an economic downturn. This means that the stock will steadily increase in value with drops every few years, and because these are easy to predict and somewhat guaranteed, you might want to hedge against these every time this happens. By doing so, you can protect your gains and enjoy owning such a revenue powerhouse for many years. This was the Coca-Cola stock analysis. Please like and subscribe to the channel for more finance and banking information.